Hello and welcome to the Dividend Wave. Today's show is on three high-yield aristocrat companies that we think still present very interesting value to add to your portfolio. These three companies have grown their dividend over the last 25 plus years, and they are Altria, the tobacco giant with sales predominantly in the US, AT&T, the telecommunication and media conglomerate that, as acquirers a few years ago, Warner Brothers, and also Walgreens Boots Alliance, which is a pharmaceutical, pharmacy, and retail business with operation in 25 countries. So one quick word on valuation. The Nasdaq 100 closed yesterday up for the year, and the S&P 500 only closed down around 12%. We think with the current market conditions, our reading is that we have an overvalued market. The price to earnings ratio, in our perspective, is on the high end, which is making more difficult to find value from the market in these conditions. So just one quick one on PE ratio. PE ratio is just the current share price of a company divided by the earnings of that company per share. And as we've seen before, the earnings per share is the net income or profit divided by the total amount of shares. If we look at the S&P 500, the current PE is of this index is around 21.75 when the historical PE has been 16. So we believe that the market is quite overvalued. As to the Nasdaq 100, the current PE is above 25 when the historical PE has been in the range of 24 if we exclude the dot-com bubble, but even if we exclude the dot-com, it has been 27. So the current valuation is on the high end. So this is our short form of analysis to screen for companies that we would like to add to our portfolio. And looking at the companies of today and taking their annual dividend and their current share price, we can determine the current yield. As we can see, we have some attractive yields here, above 4% for WBA, in the range of 7 for AT&T, and above 9 for Altria. But what we really like to do is comparing the companies against themselves. We like to take the average 4-year yield and compare it versus what you would get today. So if we do this, what you see here is that AT&T is yielding 18% more currently than what it has over the past 4 years. And WBA and Altria are actually yielding 75 and 80% more than the past 4 years. So here we screen for current return versus historical, and these companies are doing very well in that metric. We also like to look at the dividend growth to see how fast the companies are growing. And similarly to what we've done with the yield, we like to see the payout ratio, the current one, but also the average 4-year payout, just to see if the companies are growing earnings and are able to sustain the dividend increases that they are giving out to their shareholders. So here we screen for sustainability of the payout. We also look at the forward PE, so the price to earnings, just to see the valuation versus the overall market. So as we've seen previously, the S&P is in the range of 20, whereas these companies are around 11 and below. So very poorly valued by the market. And we also look at the years of dividend just to make sure that we have companies that have a track record of delivering cash and dividend increases to their shareholders. So these are the most basic parameters that we use to analyze companies that we like to add to our portfolio. So this is the dividend wave that you would get if you would invest in the three companies. Interestingly enough, they pay in different months. So you would get a dividend a month, interesting for your cash flow. You would get a combined 6.7% yield, and you would be investing in three aristocrats that have remained committed over the years in the ups and downs of the economy to returning cash and value to its shareholders. For our European investors, we recommend Revolut, the online bank, to buy your shares as they have no commission on trading. We don't get any compensation, so this is just that we believe in their product. That's how good they are. That's been all for today. Drop us a comment, um, like, and subscribe. This is not financial advice, so seek it, do your own research, but it's been great having you around. So see you soon.